Hey traders, happy Wednesday. It is currently Wednesday afternoon, about 5 p.m. Pacific Standard Time. Just wanted to give a quick follow-up video to the weekly market report that I published on Monday instead of this weekend, since Monday was the President's Day holiday and markets were closed. So right now, again, we're looking at the S&P 500 futures. By now, you guys will probably figure out that is my standard chart when I first start looking at the market health, market trends, that kind of thing. The S&P is the first one that I always go to. So if we drop this out first on a longer term weekly chart, and then we'll work our way in from here, you can see the market has not done anything wrong. Yes, we have a little bit bigger red candle here for this week than we would like, but it came down and touched and held so far that 4,000 level, which we identified in our previous video as the line in the sand that we really need to see the bulls step back up at. So it has not violated that with a close below on the weekly. It is still holding above the diagonal resistance line on this weekly long-term chart that is also very important. And that actually gives us a little bit of wiggle room, even if prices intraday or on a daily chart come down under that 4,000 level a little bit. As long as it holds above and finds support on this diagonal resistance line, I'm going to consider that a win, but I really do want to see that 4,000 level hold. If that 4,000 level breaks, personally, I am probably going to be a little bit more cautious playing the next bullish cycle until it reclaims that and some of the moving averages on the daily chart improve. We are also holding this shorter term uptrend channel that we drew a couple of weeks ago as well. You can see again, we tested that and we are holding directly above that right now. So that's on the weekly chart. Let's go into the daily chart, look at this really quick. So here's that 4,000 level that we said needed to hold. And by gosh, it is holding. It is doing its best to hold. I'm going to zoom in on that right here. You can see a big red candle. This actually signaled increasing momentum to the downside on the daily chart. This was the futures Sunday night / Monday day candle. And we don't like to see that increasing momentum to the downside, increasing because this candle was much larger than the previous one, and it closed towards the low price that candle made, signaling strength to the downside. That said, it came into this 4,000 level, which is a very important level for all sorts of reasons in the market right now that I covered in that video. So if you want to see more about why, go and watch that video. Gave us a nice doji candle. This is a textbook doji candle. A doji candle is basically where the opening price and closing price are in the middle of the range with these upper and lower wicks on both sides. This kind of shows indecision. It shows slowing momentum in the downtrend because the bears couldn't win out. The bulls couldn't win out. It just kind of stalemated right at that important level. And now if we zoom in even further, you can see we are forming a little even mini doji right on top of that at the exact same level. This candle has only been forming for a couple of hours. The futures market opens back up at 3 p.m. Pacific time, and it's now 5:15. So we have about 2 hours and 15 minutes worth of data here. And so far, it is trying to hold for confirmation to the upside because this was a deeper retracement than I otherwise would have liked. I'm going to be a little bit more cautious. I'm probably going to be leaning towards different types of strategies like naked puts or bear put spreads, things like that, that focus on cash flow instead of directionally playing it. And we can show you, let's drop in one more time. Actually, before I drop in one more time, another reason that I'm not going to be aggressively bullish on this, at least initially, is that the MACD down here is signaling bearish still. We want to see this histogram in red start to shrink back towards this purple zero line and turn green again. So if we do get this blue line to curl and come back up above the purple zero line here on our MACD, that will give me a lot more confidence. Also in our RSI, we're kind of in the middle of the range. RSI is relative strength indicator. And it basically helps depict the strength of trend and whether things are overbought or oversold. So here you can see in blue with the green arrows, this was oversold to the downside. It coincided with a double bottom, and then we got liftoff from there. Over here, we got double arrows red showing it was overbought, meaning that it was maybe at its high price or needed to take some time off to consolidate at least. And lo and behold, now prices have pulled back and it has pulled back into the range. So on the RSI, I would like to see this bottom and start to move its way back up again, along with whatever price bounce we get. And finally, if we drop this into an intraday chart, I'm going to go into the 30-minute chart here to show this point. So the question that we need to ask ourselves as traders is, when do we feel like we've had the confirmation needed to then play this next bullish trend higher? And right now, even though these are nasty red candles, the base case is slightly bullish. Support has held so far. We have the slowing momentum candles. If we get a signal candle here that closes above the previous candle's high, that technically is signaling a pivot and potential upside to come. So if we go to that 30-minute chart, we need to decide where our line in the sand is for that, where we are comfortable taking the downside risk to be able to play the upside further. For this, couple of things, you can always do diagonal resistance. So we come down here and say, okay, if it breaks above this diagonal drawing, that might be confirmation. Right now, from where prices is going to go, that's going to happen sometime underneath 4,020. I don't think that's enough confirmation because we have several of these candles on the intraday that poked up above and still failed. So my ultimate is going to be at the top of this channel here, and the high of this was 40.25. So I'm going to go ahead and put an alert there for 40.25. Bam. And if we get price action above that, we can consider that a reversal on an intraday chart. Then we have to start working our way back out and look for reversals on the larger time frame. So whether or not you take a trade on that break above 40.20 depends on what time frame you are trading. If you are a day trader and looking to close the position before the end of the business day, then by all means potentially take that. If you are a swing trader looking for swings on a daily chart, we probably need a little bit more confirmation. Or another strategy would be scaling in. So maybe doing a partial position on a break of 40.25 and then scaling in further once we have more confirmation to the upside. So those are just a couple of quick things on that. Last but not least that I'll point out here is we kind of have this megaphone pattern. And I'm going to actually, let me just clear the drawings here so you can see it clearer. There we go. This megaphone pattern here is basically a pattern. Megaphone patterns signal indecision and extra volatility. So this is kind of telling us right now, price is right in the middle of this exaggerated range where the lows and highs are getting lower and higher each time this goes. Now that can only happen for so long before price breaks to one side or to the other side. We need to see this intraday volatility resolve itself, ideally by setting some kind of higher pivot low on the intraday, consolidating sideways for a little bit, and then eventually breaking through this channel at 40.25 where we have our alert set. So that's kind of the ideal situation, would be see this pull back a little bit, base, set some kind of diagonal support line, come back up, base again, and then move higher. At that point, we would have a defined pattern that we could trade off of. Right now, it's just extra volatility, so we're kind of drawing lines in the sand as our best guesses. And right now, for the upside intraday, for me, that's 40.25. So anyways, I hope these little videos are helpful. Last but not least, actually, let me show you one last chart. So this is a Heikin-Ashi chart. It is a Japanese style candlestick where they adjust the formula for calculating the actual candlesticks themselves. And you'll see that it kind of removes some of the noise. This is the same S&P chart. If I go back to this again, you can see it alternates between green and red candles sporadically on the uptrends, a lot on these kind of choppy topping patterns and bottoming patterns. And then when there's a strong downtrend, even though this had a couple of green candles that were up days, if we go back to this, those green candles disappear and they are all red candles. So the Heikin-Ashi Japanese candlestick chart really helps to smooth out the noise in price action to give you a little bit clearer indication of the current trend. And right now on the Heikin-Ashi chart, the current trend is still down. Anytime you have big red candles with no upper wick and a long lower wick, that signals strength to the downside. Opposite is also true. Green big candles with upper wick and no lower wick shows signaling strength to the upside. When you have wicks on both sides of these candles like this, or they're alternating back and forth between red and green, and you have these kind of doji candles, that signals indecision, and the market does not know which way it wants to go yet. We saw a lot of that down here at this last pivot low. I'm kind of anticipating we're probably going to see a little bit of that here as well. So just keeping an eye on that. But for the next bullish movement, we really need to see these internals clear up a little bit, and just wanted to give my 2 cents on lines in the sand to keep watching for. Again, on the lower side, since we are above 4,000 right now, we definitely want to see that 4,000 level hold. Underneath that, we do have more support down at 39.50. That would probably be the next line in the sand. It corresponds with our 200 SMA, but also comes back and was a really important price pivot here, 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 and the upper range of this breakout consolidation when the bottom of our last pullback happened. So 39.50 is the next level down if this 4,000 level breaks. Let's see if it can hold to close out the week with a little bit of strength here. Anyways, I hope that's helpful, guys. Take care.